Ladies and gentlemen, welcome to the December quarter webcast for Cadence Capital Limited. This year we celebrate 5 years of being listed, and that actually happened in the December month of 2011. And our numbers for the 5-year period now appear on the ASX Morningstar ratings sheet that gets handed out by the ASX every quarter. I'm pleased to say that we've been ranked number 1 performing listed investment company for Australian equities over 1, 3 and 5 years. We've actually put that presentation up on our webpage, and if you go to cadencecapital.com.au you'll be able to download that presentation along with our Zenith rating and join up for any of our newsletters if you're interested. On the following slide we actually give you a quick snapshot of the performance table produced by Morningstar LMI. We have just announced our half-yearly results for Cadence Capital Limited, and the board has resolved to pay a dividend of 4 cents for the interim, as long as a half a cent special, producing a combined dividend of 4.5 cents for the half-yearly period. The dividend is up 50% over the previous corresponding period. The related dates for the dividend are: the ex-entitlement date is the 19th of March 2012, the record date's the 23rd of March 2012, and the payment date the 2nd of April 2012. We'd like to remind all of our CDMO option holders that if you would like to exercise your options to receive the 4.5 cents fully franked dividend, you'll need to exercise those options by the 16th of March 2012. We reiterate our desire to pay at least a 7% fully franked yield for the financial year. CDM has accumulated around 23 cents of franking per share, enabling the company to pay around 52 to 53 cents of fully franked dividends over time out of existing company profits and before earning any additional profits. These franking credits put the company in a very strong position to paying an increasing stream of fully franked dividends. To many investors, such as self-managed super funds, these franking credits have substantial value. It is envisaged that the full year dividend will be announced before the 15th of September 2012 and go ex-entitlement after the 15th of September 2012. The CDMO options can be exercised at any time on or before the 15th of September 2012 and have a strike price of $1.25. And now on to the half-yearly performance for Cadence Capital Limited. We had a good start to the financial year with a gross portfolio performance of 2.41%, outperforming the All Ordinaries Accumulation Index by 12.04% and the Small Ordinaries Accumulation Index by 14.73% for the 6 months ended the 31st of December 2011. I beg your pardon. Positive performance came from RHG Limited, Alasa Gold Corporation, ZYL Limited, Reckon and Bravura Solutions Limited. Underperformance in the period came from Rio Tinto Limited, Macmillan Shakespeare and First Folio Limited. To date, a number of our portfolio companies have already reported their half-yearly results as well, and I'd like to go through the ones that we have received. Basically, as an overriding comment, the reporting period has produced results that are either in line or slightly ahead of our expectations. Some notable results are: RHG has reported earnings ahead of our expectations due to higher margins than we had expected for the RHG book in runoff, and has declared a 10 cents fully franked interim dividend. We believe that the second half dividend should be approximately around these numbers as well, perhaps slightly less. The Reckon result was in line with our expectations, whilst capital expenditure and relocation costs were slightly ahead of our expectations. As always, the underlying result for Reckon, along with the underlying cash flow for the business, was extremely strong. The Flexi Group result was slightly ahead of our expectations, and we have actually added to that position in recent weeks. The ANZ and NAB results were in line with our expectations. Interestingly enough, a number of the mining services companies that have reported have generally been ahead of our expectations. And now briefly onto the outlook for the remaining 6 months of the financial year. And it's fair to say that the start to this year has been an interesting one. Just as the calendar year ended on a relatively low note, with negative market returns for the 6 months, and many resolved to more negativity, the market was up 5% in January 2012, perhaps showing signs of life and proving the experts wrong again. Late December and January and early February have proved valuable periods for the fund, with 6 new positions added to the portfolio. To put this in perspective, this is probably more new positions than the entire period for the last 6 months. Whilst it is always difficult to predict where the market as a whole is heading, there are some very good opportunities presenting at an individual stock level at the moment. Once again, bottom-up stock-by-stock analysis, combined with scaling in into and out of positions, is working well for the fund. We expect more mergers and acquisitions activity as company directors and management chase earnings growth through acquisitions using low cost of funds, if companies are able to access additional debt. We remain cautiously optimistic for the remaining 6 months and hope to be able to provide an update in the next quarter. Thank you.